Morning, Johannes. Welcome to the podcast.
Morning. Many thanks for the invitation.
Great. It's great to have you with us. Lots, of course, to talk about. Really love what's going on at the moment in the heavy-duty freight space. So really keen to dig into what you guys are doing and the problems you guys are solving. But I always like to start the podcast with a little bit of, the I guess the entrepreneur story. Your background, like most entrepreneurs, is quite varied, and certainly interested to hear how you came about co-founding the business. So maybe you can give a little bit of the backstory.
Sure. I personally have a background in business and energy economics, environmental economics, I was working in Paris at the OECD and the World Bank on energy systems. So quite broad, quite a high micro level. And at that time, kind of data centers were the big story in terms of load growth on the grid. So we worked a lot with the grid providers, the energy utilities, big tech, of course, so the big data center providers, and increasingly batteries were also coming in the picture. And that time, that was about 2.5 years ago, my co-founder Philip, he was developing battery systems in Taiwan, coming back to Europe, and essentially, told the story about how batteries are the next big thing. So how about hardware prices are dropping rapidly, which enabled at that time entirely new business cases that were not possible before. So initially, we focused on building out a battery developer called Delta Capacity. Focus on utility scale battery projects, kind of 100 megawatt plus, starting out of Sweden, then very quickly Germany, Sweden, Switzerland, kind of building that out into a proper company. And then about 2 years ago, we had a lot of requests from real estate developers that had logistics companies as their tenants, initially in Sweden. And these tenants were electrifying rapidly because Sweden tends to be a couple of years ahead in terms of electrification. And they were realizing that they're running into grid constraints because the volumes in electric trucks, kind of the battery capacity, when you have 10, 15, 20 trucks and you want to charge them in one place, that quite quickly comes to the limits of existing grid connections. So after a couple of these requests, initially we said no because that's not what we do. But then after 6, 7 of these requests, we kind of couldn't ignore it anymore.
You spot the signal,
and exactly, and really started looking into it. Spent a proper year going to every conference, talk to the big truck manufacturers, because we need to see if electric trucks is actually a thing, if that's really coming. And after a year, concluded that yes, it is coming. There's an enormous challenge in providing the infrastructure to charge these trucks, but it is also an enormous opportunity to arrive from a battery perspective and apply batteries to that problem. And fundamentally decided to spin off a new company called Delta Charge, which is what we're building right now. And really focusing on that truck logistics vertical, because that's where, again, coming from the macro perspective, where the new load growth will come over the next decade.
Yeah. I mean, it's always good to have those market signals, and customers knocking on your door is always a good thing. But talking back about to yourself then, because again, working at World Bank, OECD, a lot of obviously intellectual challenge, I'm sure, a lot of exciting stuff to be done. But then it's a bit of a leap to come from kind of a policy strategy environment to actually founding or co-founding a business, even if it's on the back of other things which are maybe a little bit established. But what was it that maybe triggered that maybe you should do this for yourself rather than maybe joining another company, or again, maybe continuing in a lobbying or a policy capacity, but you chose to co-found a business? So maybe what's the rationale behind that?
So to be honest, I was toying with the idea for a couple of years prior. As you said, intellectually, working in this environment was a great challenge. You work with a lot of smart people on kind of very complex problems. But it's completely different from entrepreneurship, from running your own thing. I did have, from my bachelor, which was a business background, I did have a lot of friends recently starting or having started their own companies. So there was certainly kind of a lot of social interaction with that space, and you can't help but think whether you also want to go that path, because it is another level of excitement, of intensity, of working on a problem. everything about ownership, about building your own team, building out your own idea. It's a lot more risky, but also it can be a lot more rewarding. So kind of through that environment, I was already thinking about the idea, and then my co-founder Philip coming back from Taiwan, that was really the spark that set it off, because it was thematically exactly my ballpark. That's what I was working on. But kind of it was a beautiful alignment of my topic, but also from kind of the external motivation of starting a business, which then made me take the leap.
Okay. And it's a good environment in Munich as well. Sometimes it perhaps doesn't get the, I guess, credit to a
100%.
degree of Berlin, for example, or Amsterdam, or some of the other cities where there are really cool hubs where of course, we do a lot of work. But Munich, likewise, has a great ecosystem.
I think especially in the energy kind of climate tech space, Munich seems to be the place to be. It's it's an incredible just hub of talent, and like you can't help run into people who work in the energy space. And I'm originally from Munich, so it was a kind of an easy sell to move back to Munich and start the company from here. Initially, we were talking about like kind of thinking whether we started from Sweden or from Germany. Fundamentally decided on Germany simply because the market is about 10, 20 times the size. But we do have an office in Gothenburg, Sweden being a bit ahead in heavy duty electrification. And we definitely have that double DNA of Swedish, Philip also being from there, of being a Swedish-German company.
Yeah. Well, there's no plenty about automotive in Munich as well.
Yes.
It's true. So let's look a little bit of how things have grown and where things are at the moment, because like most things, I've been in Cleantech a long time, and most things kind of almost seem impossible. Even though you know the tailwinds are strong, you'll get there, but suddenly things really go fast. So for example, obviously the battery costs will come down, but even I think 3 or 4, maybe 5 years ago, trucking was kind of things, maybe that's still a biofuels or a molecules kind of play. It was a struggle maybe to see how batteries could cope, but clearly technology and obviously energy density, all these things have evolved. And now really, as you've alluded to already, there's huge things happening in electrifying heavy duty transport. We're working heavily there ourselves. So perhaps you can share how the last couple of years have really got to the situation where you are obviously being proactive, but clearly people are seeking you out because this is a problem that needs to be solved.
100%. I think when we started working on the idea about 2 years ago, at least in Germany, it was still, I'd say, not up in the air, but people were not certain where things are heading in terms of kind of what kind of trucks will be the dominant technology. So people were still talking about hydrogen, about biofuels, kind of the whole palette of being technologically open, in German Technologieoffenheit. That was all the rage. I think in Sweden already at that time, people were certain that it's going to be electric, and there's going to be an electrification over the next 10 to 20 years. So Sweden was kind of, how do we solve this? Germany was still at a point where, people didn't really know where things are heading. I think within the last year, it has really moved from if it is happening to when and how it is happening. So the conversations we have now compared to a year ago are pretty much completely different. A year ago, you had the first pioneers doing pilots, kind of ordering the first 1, 2, 3, 5 electric trucks. But they were still testing it out. They were learning a lot and how to operate them, how to get the energy, etc. I think now it's a completely different picture. The curves are exponential. Yes, it's still at the beginning. It's only a couple of thousand, but the curves are really going upwards. And so it has moved from if to when, and especially how do we solve the infrastructure problem, which I think is still the main roadblock. The technology is there, the ranges are there. It's still kind of the first generation of trucks. The second generation is the entire powertrain is electrified. It's like you'll see a lot of advances in the technology, but the current technology is already sufficient for the majority of the routes, for short and mid haul, easily doable. Even the long hauls, like there are ways to do that electric. So we've seen a big shift also in mindset from the big logistics companies in the last year.
Yeah, definitely. I think we just actually launched saw the launch of the first megawatt charging hub in the UK actually
Yeah,
for
yeah.
trucks. So obviously, Germany have a particular focus and some good policy, I think, support recently towards developing this infrastructure. But perhaps you can talk a little bit, going back to founding the business and the entrepreneurial side of things. It's good that you see the market signals, you have people saying, can you solve this problem? And you say yes. But what's the vision of the company for the next 2 or 3 years in this, I should say, still very, very nascent, even though things are starting to move and there's an acceptance that this is the thing. But how do you then see Delta Charge evolving in these first couple of years while it is still at this early stage?
So, as you said, what we saw was an infrastructure problem, kind of the traditional problem that you have in electric mobility. You don't build the infrastructure unless the vehicles are there, and you don't buy the vehicles if you don't have the infrastructure to charge them. So the classic chicken and the egg problem. Us coming from the battery space, we actually saw a way to solve the chicken and the egg problem, which for us means we built hybrid sites. Yes, the charging, and that's where the Delta Charge, the part of the name comes from. The charging is a big part of it, but we do come from batteries, and that's where our expertise really lies. And we think applying battery storage to the problem has a number of advantages, and that's where we want to. That's where we add value as a company. That's what ultimately we want to build out. We want to build out a network of fundamentally hybrid assets, so battery charging combined assets, across Europe, starting from Germany and Sweden. But the ambition is very much doing that European wide. And that being an infrastructure problem, it's going to require infrastructure financing as well. We did start out as a spin-off. We do have a VC investment of about 4 million that we just announced a couple of weeks ago, which helps us build out the kind of the initial team, the initial technology. But clearly, where we're heading is large volumes of infrastructure finance, and there's a lot of money out there that wants to invest in clean assets, that wants to invest in bankable and secure clean assets. And as a company, I think the big challenge of scaling it at speed is combining the startup speed that we have in the fundamental company, but combine that with large scale asset financing. Because that's what gets you the speed and the scale, and also the impact you can have on the problem. You're not going to solve it by doing individual projects here and there, but you're going to solve it by building a large network of connected assets that fundamentally deliver, and that's the big vision where we want to head at the company. We want to provide secure, predictable kilowatt-hour prices to the logistics companies.
Yeah,
because that's the one thing that the companies need to calculate their TCO, their total cost of ownership, and that's what gives them the security to invest in the rollout of electric trucks.
yeah. Clearly, it's a company. You're not obviously not a battery manufacturer, but what part of the
Yes.
system and the solution is proprietary? Are you purely a systems integrator, or do you manufacture any hardware, software? What's the secret sauce for Delta Charge?
We do not manufacture any hardware. Those are tier one suppliers, both on the battery and charger side. I think that problem has been solved. There's some fantastic companies out there, and quite frankly, I think we'd be 5 to 10 years late to the party. So we are very much a system designer, a system integrator of the hardware. And I'd say the core USP, the core IP of the company are the algorithms to optimize energy flows on those assets. In our case, that means it's hybrid sites. We do behind the meter optimization and we do front of the meter trading. And that orchestration of the energy flows on the site that is solar capacity. You have heat pumps, you have the truck loads, kind of when different energy flows go to the battery and from the battery, and then the excess capacity of the battery. How do you trade that on the flexibility markets? That is the core IP. We need that to size sites, so to understand how big a battery has to be and could be. And the same algorithms then are used to do the on-site optimization and energy trading.
Well, these things are quite complex because it's quite early. We talked, I think, when we spoke previously about the V2G market and how that's sort of clearly going to be quite instrumental, but still very much technically and certainly policy-wise at its infancy. So it must be quite tricky to, I guess, future plan or build or know the revenue stacking opportunities on any given site when things are moving so quickly. Yeah, how do you go about? I mean, for example, what's your business model? You talked, I think, on your website, and when we talked previously about sort of fixed price charging. So, what enables you to be able to offer that?
Um, well, the short answer is batteries, because they're ultimately a tool for flexibility. What you buy with batteries, and yes, you can model that. You can model now a business case for the next 10 years, but what we know for certain is that it's not going to look the way we model it. What we know for certain is that you buy flexibility, and you can meet the market demand for flexibility in many different ways. You have the kind of behind the meter optimization. That basically means you optimize your existing solar or additional solar that comes in. It is peak shaving. It is energy arbitrage. Yeah, quite easily buy low, sell high.
Yeah.
And it is the participation in the flexibility markets, kind of the traditional way that batteries make money. What now comes on top of the traditional ways of how batteries make sense is the truck charging component. That is a huge new load that's gonna come. It's quite predictable because the companies know when their trucks, kind of how long the trucks are going, when they're gonna come back, when they need to charge. Yes, there's some variety to it, but fundamentally it is predictable. And that predictability allows us to hedge it through the battery, and then putting the batteries together into a virtual power plant, hedging it over a large portfolio. So you get more and more certainty at scale that you could never do by yourself. And if both the algorithms and the market participation do not make sense for one site or 5 sites or 10 sites, it makes sense for 100, 200, 500 sites. And that's the win-win that we offer. We aggregate the sites, we do the optimization on site, but also we do the trading kind of collectively. And that's what allows us to then offer a low guaranteed kilowatt hour price, which is what the operator wants and needs.
Certainty, absolutely. So you then will be building, operating, and owning the infrastructure.
Yes, at the moment, a couple of different ways that we operate. We have some customers that want to buy the infrastructure themselves. That is fundamentally fine for us. What we always do is the operation, so the energy optimization. To us, it doesn't matter too much if we own the infrastructure or it's owned by the customer. What matters to us is that we can do the aggregation and we can do the optimization. Because that's where the win-win happens, and then the logistics market runs on very thin margins. A lot of the customers do not want to invest or can invest kind of huge sums for infrastructure, so there we're happy to do the financing ourselves. But fundamentally, it's about operating the kind of the stack.
Since you're involved in all aspects, clearly that background with batteries and understanding of the grid is fundamental. But you talked also about at the beginning about the the chicken egg in terms of the OEMs first building the trucks in order for people to buy them. So, how are you seeing the market evolving there in terms of all the moving pieces? Are they keeping pace enough to be able to see the transition go as quickly as some of us would hope and think it may do?
From what we can tell, and we do talk to all the big truck manufacturers, also for the future, because there are a lot of exciting partnerships that you can imagine. They do very much want to scale it to a point where they can do it, really at large scale. MAN, for example, has a target of doing half of new truck sales by 2030 electric, which is of course a big target, and you need to operationally that's a huge task. But they certainly have these targets, and they're building the internal operations to meet them. Of course, that could be, as always, could be off by 1 or 2 years, but fundamentally that's where they're going. They're going into a large scale platform electrification, scaling the operations to go there. And also for them, the missing piece is infrastructure, and especially grid infrastructure. That's why and that might be a self-serving argument, but I do not see many other possibilities in the current grid environment, and it doesn't look like it's getting better in the next 5 years, than to put battery storage in between.
And it's not unique to Germany or Sweden either, that situation, of course.
Exactly. Just from the German example, Germany has about 870 DSOs, so local grid operators. It is like when you look at the map, you're really surprised. And of course, they are doing their best, but they have not been historically set up to meet the extremely high demand of assets that want to connect to the grid. So from the German example, extending your mid voltage grid connection can take 5 years. It can take 10 years. Nobody is able to tell you when it's going to happen.
No, exactly.
So you might as well install a battery storage that also earns you money to circumvent that problem.
What's the plan then in terms of siting? You talked about clients and obviously larger real estate companies with logistics tenants been some of the early sort of signals that this was the market for you. But also there are, and we touched on this, I think, companies like GridSurf, which is of course for passenger vehicles, not heavy trucks, but building these hubs, which are again battery, solar, renewables hubs. But how much of the infrastructure do you foresee being actually on a logistics site or owned or even if it's leased or whatever the model on site versus things like motorway service station-esque type of things for trucks, if you know what I mean? So hubs which are not attached to any particular firm. Do you see, or how do you see that mix?
It's a really interesting question. I think it's definitely going to be a mix. You will have the Mylances of the world offering kind of highway charging for customers that need it. You will never be able to match the kilowatt hour prices that you can get in your depot. It's many times that, and for a majority of our customers, because it is business critical and they need predictability and planability, they want to do, if not all, but the majority of the charging in the depot. Especially if you run a depot where you can do overnight charging, that gives you a lot of flexibility when to charge the trucks, and then through the battery of really bring down the cost per kilowatt hour. I think there's going to be a lot of cases where it's kind of semi-public. So a depot that's not going to open it to everyone, because again, you need predictability. You need to be able to charge when your truck is there. But you might want to open it up to maybe your neighbor, maybe to your 5 neighbors that also have a lot of predictability in their operations. So I think kind of it's early days, and there are a lot of different business models. Also, the logistics companies they're beginning to understand that it's an enormous opportunity to have that on site, because you can open it up to third parties. Maybe not to everyone, and maybe not at all times of the day, but certainly kind of that semi-public use case.
Another revenue stream potentially.
100%.
So what's the policy environment like, firstly in Germany, and also then perhaps broadly more as you expand across Europe in terms of supporting infrastructure rollout, particularly for heavy-duty fleet and trucks?
It's a big challenge and a big question, and we do spend a lot of time monitoring and also understanding, and then also explaining the policy environment to our customers. I think especially on the grid side, it is an interesting cluster problem. It starts from the European level, where neither the European Union nor the member states have clear responsibility. It's not either or. It's a funny mix of European responsibilities and national responsibilities. And then Germany, you have the added benefit of these 870 DSOs that apply to their to their local circumstance. I think what is clear, again, what we talked before, is that flexibility is going to be a major asset. For example, in Germany, the Netzentgelte, so the grid levies, they will certainly be, there's a big reform for 2029, where it's going to be kind of a new system of how they're going to be applied. And nobody can tell you today how that's going to look like, because there are about 10 different models that you could use, and it's extremely murky. What is certain is that it's going to be dynamic, and it's going to benefit people who can flexibly up and down their electricity consumption. Now, for kind of most German SMEs, kind of your typical industrial SMEs, they can't scale up and down their production to the kind of to the market sickness of electricity prices, of course, unless they have a battery in between. But you can't flexibilize production that much. I think for logistics, it is a big advantage if you can again provide flexibility. You will be able to meet these flexible charges. We can't tell you exactly how, but it will be coming, and it will be a major advantage.
Okay. Are most of the customers at the moment logistics companies which are within country, if you like? Because of course there's a big inter-country, intercontinental logistics issue. In fact, I think the first electric truck came through the Channel Tunnel through Eurostar last week.
Yeah, I saw that.
So that was approved, which is cool. But yeah, so obviously, how much at the moment is kind of in country, where there's a little bit more, I guess, certainty to a degree, versus when we start getting into cross-border logistics.
So the majority of our first projects are very much short and medium haul, and they're within the country. So classical examples, we work with a couple of breweries, which is a nice use case, very close to my heart, but also interesting just from a business case. They have their classical distribution routes where they go to the different restaurants that they serve, and then they come back to the depot and they can charge overnight. I think that's where electrification will start, also in the next 2 to 3 years. That's where the majority of investment, the majority of pilot kind of projects will be. But then, of course, also in the conversations with the bigger logistics companies that we have, it's going to be cross-border, and also we as a company, we need to be able to serve beyond Sweden and Germany. We have a small office in Prague. We'll soon be active in Switzerland, Austria. So we will be expanding kind of from the core Germany and Scandinavia to more and more in of Europe. But also it's going to be a lot about what we talked before, the hybrid case, where maybe you don't build out your entire portfolio with the full charging capacity in every single depot, but there will be alliances, there will be kind of aggregators on the charging side. Also a couple of really interesting companies from Munich that will help to bridge that logistical gap that maybe you don't want to, as a company, completely finance your own, but you want to share with other companies as well.
Which is fundamentally why, as we started the conversation talking about sort of the large-scale infrastructure funding and finance, is so integral to the whole growth of the sector.
100%. And again, I don't think you get very far with piecemeal and doing a project here and there, which is exciting. But what is more exciting is finding a vehicle to do that at scale, and to do that at scale for very large companies with hundreds of sites. And then these companies can start thinking about their own Bilanzkreis, kind of their own energy system, because again, when you get up into certain volumes, it does make sense to do smart energy trading and optimization kind of on a fleet level, and that can be across Europe.
Yeah. I guess the good news on that is the money does seem to be these days in the ecosystem generally towards infrastructure, large bets, rather than the VC market, which has been a bit more challenging, as you know, even with a small raise recently. So that's clearly a very positive sign that there's no shortage of capital available. Going back to, I guess, some of the policy support to do that. In terms of the future expansion, because clearly Delta Charge are going through great startup growth and expansion at the moment. You touched on a few countries there. Is it particularly the DACH region, which obviously has both language and sort of other cultural similarities that are supportive, or are there policy signals in the different countries that make you choose those countries? What's the growth plan? Where will we see Delta Charge in the next 3, 4, 5 years?
So like in the next year, I think certainly, as you said, it's going to be DACH and Scandinavia. We have a super exciting project in Norway and Sweden. Then Germany is the core market, and Switzerland and Austria. The ambition is very much to build a European-wide kind of portfolio of assets. You can call the industrial or the battery backbone of logistics, and logistics is European-wide. So I think the natural expansion is to go where the big logistics companies are, where they operate. That could be Poland, that could be France, definitely Netherlands, Belgium, Denmark to bridge our two target markets. So that's very much the ambition, and there is tremendous opportunity for growth. There's a tremendous amount of capital needed to finance and build out the infrastructure. So the opportunity is enormous. But as always, it's about scaling it fast, but not it's not a B2B SaaS business that you can hyperscale to ridiculous amounts. It needs to be somewhat healthy as well. You need to build up the project teams, the engineering teams, the software teams, to properly manage that growth as well, because it is like we're building real projects. It's not a software business that we're in. We're building hardware. It's and it gets complicated. Every project is different. So but the ambition is very much there.
In terms of the growth, again, because there are so many moving parts that need to support the rollout, how do you, from a commercial, obviously I know you're doing a lot of the commercial sales as every founder should in the first instance, but how are you seeing, or how are you targeting the marketplace? Because again, are you targeting purely the logistics companies, the real estate companies, the Stadtwerke and sort of DNOs, DSOs? How are you targeting the market? I guess maybe all of those things, but what's the sort of, I guess, where are the quick wins, if there are such things as quicker wins at least?
Definitely all of these things. We were in the kind of up until now very fortunate position that we had more requests than what we could serve, which was actually a big motivation to raise VC money. The other option that we thought about a year ago was to purely finance it out of cash flow. But then the amount of requests and also the amount of the challenge and the opportunity of growth was so big that we felt there's opportunity to accelerate it, which is why we did raise venture capital. Also, why we chose the partners, the two funds that invested, Vireo and Rethink Ventures. One very much focused on logistics, the other one focused on electrification and battery storage. Exactly the two topics that we tackle as a business. And they have been an immense, enormous help to scale things. And I think, going forward, we'll see how fast, how fast we can scale things. But there are a lot of multipliers that you can use to scale. The big real estate developers often have many hundreds of sites. And they tend to lease everything. They don't really own much, but they lease a lot. Word of mouth is a tremendous growth lever. Kind of the first projects we're doing, everyone has 10 friends that have heard about it. The batteries are quite visible when they stand on the in the depot. We have a lot of avenues for kind of growth and clients. We're still struggling to meet all the demand that is incoming, but also going forward when it comes about building large pipelines, there are a lot of multipliers, big logistics companies, big real estate developers that we can work with.
Yeah, and first or early mover advantage, certainly, I should say, because these things are very visible and very much talked about, which is kind of cool. Let's touch a little bit back, Johannes, on your journey, because we said intellectually challenging to look at strategy and policy and things, but now we touched on founder selling and things. So how have you adapted or from that more helicopter mindset, which you clearly still have, you need to have, but actually getting into the execution? How has that been for you? What's been the highs and lows, if you like, of that transition?
So it definitely was a bit of a challenge in the first couple of months to switch gears. I think very clearly it is a different cadence. In terms of pure hours, I think at the moment it's certainly kind of 90, 100 hours per week, but also the intensity of work. I think from a policy kind of high level strategic view, you have a lot more time to think things through, which you need to do, and it's as you said, intellectually rewarding. But I think the main difference is really the cadence and the intensity of work, combined with, and I think that's also true of most startup founders. You just suddenly have 10 different jobs that you do simultaneously at the same time. It does get better because we hire people that are better at their jobs than we are, kind of for their areas of expertise. But I think that was also the key learning to give away some of the tasks that you do in the early months, kind of the first year, because you do have to do everything yourself, and then find people who can take over these areas, and who can really build an organization, also all the process, who can build a team behind them. One of the key things that we look in when hiring new people is, have they done that before, and are they capable of building a team around them? So we do hire a bit more senior, a bit more experienced, because again, those are big projects with high volumes. It needs to be serious people who know what they're doing. So I think that was the key difference between before and now.
That could be one of the challenges, kind of. We've talked on this before about hiring people who can do now but can do the future, which obviously
Yes.
typically means they
Yeah.
cost more because they're more experienced and everything else. So that's one of the challenges for a startup which we obviously work with a lot of startups, is where do you pitch the hire? Because if it's too low, then they quickly outgrow, or the company outgrows their capabilities. But in order
exactly,
to attract...
and I think in the kind of business we do, we need to strike a balance between innovation and speed, yes, but there's a big trust component. You do build kind of multi-million-dollar projects that are critical infrastructure. They stand on someone's site for 10, 15 years. It's like you're not selling a box and then you're gone in 3 years. It requires a high degree of trust in everything you do and the people you hire, the people you interact with. So I think compared to most startups that lean a bit more kind of on the scale from innovation to trust, that lean more on the innovation side, there you can afford to hire more junior, to break things, kind of to move even faster. We need to strike a bit of a balance between innovation and trust.
Yeah, makes sense. And again, we've talked on this before. Perhaps a little extending from that conversation to what perhaps you wish you knew when you started the business that you know now.
I think I would have wished to. We certainly had to adapt how to pitch to venture capitalists. So kind of my background from OECD and World Bank, those were like big numbers, like very complicated Excel sheets, like proper financial engineering. Same for Philip, and same from the Delta Capacity story, where we were raising from large infra funds, kind of hundreds of millions for big infrastructure projects. I think pitching to VCs and selling the story, kind of the whole fundraising process, was a very different thing, because they look at different aspects of the business. I don't think there's a better or worse. It's just a different way of looking at growth and at scaling companies, and that certainly took a couple of months to adapt the language, also the messaging, and to make them understand why a VC case in this in this business also makes sense. Because we certainly we did grapple with the question: is this a pure infra case? Is this a VC case? Is this a PE case? I think now we made a very convincing argument why this is both a VC case and an infra case. But it certainly did take a lot of thinking and adapting around that. So I think, kind of me a year ago, that would have been a great thing to know.
Okay. Yeah, no, it's always a challenge, that fundraising for many different reasons. Not just the fact that obviously it's a little bit more challenging to access money these days, but actually, as you say, finding the right partner. I know the guys at Rio and Felix very well. They're good people. Yeah, finding the right VC that understands the case, they're investing with the right mindset and understanding of the growth trajectory of what it could be. That's always a challenge. Building teams, of course, is a challenge we've talked on. What are the other things, I guess, that have not kept you up at night so much as the things that have taxed you intellectually? You thought, actually, these are problems in terms of building the businesses that have, again, give you the most headaches, but also the most reward, perhaps, when they get it right.
Yeah. I mean, scaling a team, as you said, that is, it takes a lot of time, but it's incredibly rewarding. I think it's one of the, I mean, the whole thing is probably the coolest thing I've done so far in my professional life. It is extremely rewarding. Also seeing to grow a team. What we discussed, like handing over tasks to someone who does it better and who comes up with ideas that you never thought of. That's extremely cool to see. I think what is always challenging is to decide as a company, especially as an early stage company, what to build yourself and what to not build yourself. Because theoretically, the whole value chain of what we're doing, you could go all the way and build the trucks as well, and you can build the hardware, and you can kind of build the whole thing. Theoretically, if you control the entire energy flows from the grid to the truck, that is the biggest optimization that you can do. But it's been a challenge, and I think by now we figured it out pretty well. What to build in-house, what is business critical, what doesn't exist. Just one example. What does exist is a CPMS, a charge point management system. That is a problem that has been solved. That's a problem we don't need to invent again. That's a problem where we have partners that we can work with that work super reliably. They've done that for years. That's a problem that has been solved. I think that was one of the biggest challenge really in the first year, to map out that ecosystem, to map out the value chain, and then decide strategically what are we going to build and what are we going to where are we going to partner with someone.
Yeah, I think we've seen some very big cases, obviously, if you look at Norfolk, in terms of getting that decision wrong, in terms of what you do yourself and elsewhere. It's interesting. There's another podcast we did with a company called Ember, who are building buses and trucks. You probably know of them. And again, some elements they've decided to specify or even start to build themselves. But that's kind of, let's just say, those challenges of what fits for your business and for your business model and for your clients. So cool. Well, listen, we've spent a lot of time talking. I really appreciate your time to share what's going on at Delta Charge and your broader thoughts. We'll share on the episode page links so people can see a little bit more of the projects you're involved with, and maybe beef up that the inbound conversations for you, which is always nice to have as a startup. But one of the things I used to do earlier on the podcast, that's Johannes, and I stopped doing for a while, and maybe just because I had too much of a pile to read. But do you read much? Is there any sort of book recommendations or books that you've read that either from a business or from a climate or technology perspective have helped you or inspired you on the journey?
That's a really good question, and we could do a whole other podcast. I like both through my studies and then also like the work at OECD and World Bank. Like a big part of the job was to read a lot, kind of like 50 to 100 books per year. I do. Can I send you a list of recommendations? Can I have a longer list of recommendations to put in the show notes? Definitely. But I think a bit off topic, but what really interests me at the moment is geoengineering. Have the politics of geoengineering. Not to paint too bleak of a picture, but we did breach the 1.5 target. We are very much on track to breach the 2-degree target. And I think it's almost inevitable that at some point there will be discussions about solar geoengineering entering the chat, because kind of when you're that deep into the problem, somebody will want a quick fix. So I think it's really fascinating. There's a fantastic book by Neil Stephenson, kind of a climate fiction on geoengineering. And just to think about these problems that are probably going to show up in 5 to 10 years' time is really fascinating. But I'll give you a long reading list of my favorites for the show notes.
Cool. Yeah, if there are 2 or 3, then it's always good. Not too many, because my pile at the moment is already overflowing, but appreciate that. But listen, Johannes, really, really great to talk to you. Super space that you're in, and great to see what Delta Charge are doing, and we look forward to seeing where you are in a few years' time.
No, thank you very much for the invite. Always great to talk to a professional about these things, because it is quite complex, but it is an exciting space to be in, because also back to the gloomy doomy part of climate. It's like energy is one of the areas where things are actually moving forward, because the economics work. You don't rely too much on policy, but you do rely on economics, and when the economics work, then at least in the current system, that's a path to change, and that works.
Better, cheaper tech is I guess the easy thing. I say the easy thing, but we're getting there. Makes life, I should say, less dependent on other factors. But cool. Exactly. Well, listen, really appreciate the time, and look forward to sharing the podcast and to having some feedback and to speaking again in the future.
Thank you, David.